Hi, and thanks for joining us on today's episode of the Retirement Readiness podcast. I'm Katie Umland, the head of marketing here at Prairie View, and as always, I have Tim Reagan with me also.
Hey, Katie.
Hi. So thanks again for joining us today. Today, we're going to be talking about 5 ways that you can shield yourself from the effects of inflation. In today's economy, seems to be talking about inflation, whether that's the price of eggs at the grocery store. That's the one that I keep seeing all the memes about, at least.
Yeah, well, it's funny. It'll be interesting to see when we replay this episode in like 5 years, and we're talking about the price of eggs and where inflation
Yeah,
is.
we should say, what's the price of gas today? So we can
Yeah,
laugh at ourselves like, oh, geez, that's what you thought was
expensive. Yeah, for sure. Yeah, and so hopefully today we can talk through, like you said, some things that maybe people can do to combat some of those inflationary costs. And for you and Alex, what have you guys done? Have you done anything?
This is probably more of a question for Alex. Besides that, he checks in with me sometimes, like, "Hey, Katie, you're home all day with Dylan. That doesn't mean you're going to shop all day, right?" I'm realizing now when you stay home with your kids, like that can't mean, "Oh, I'm not working today. I'm going to shop."
Well, but Amazon makes it so easy, right? So,
Yeah, too easy.
Well, and I think that as we've talked with some of our clients, there's been a number of things that have come up, uh, some questions that they have, and so maybe we can talk about some of that. One of those areas that they talk about is where can I kind of save dollars and cents? And we've seen a lot of clients. I don't know how you guys are, but we've seen a lot of people that have started shopping in places they didn't always shop at. Hearing a lot more about Aldi, hearing a lot
Aldi.
more about even dollar stores and that kind of stuff. I know at our house, Sarah's always looking for a way that she can find better deals on what.
We have so Alex and I live 20 miles south of here in a town called Peatone. It's a pretty small town. There's not much in town, but there's a grocery store. But that's like, ooh, that's only if we have like a last minute, ooh, I forgot this ingredient for dinner. Like we're not doing our weekly shop at the small town grocery store, unfortunately.
Yeah, for sure. Yeah. So on the one hand, there's how do I combat inflation just from saving money and watching where I'm spending those dollars. But then on the other hand, I think there's things we can talk about on how do people, you know, invest their money and that kind of stuff.
So in these kinds of times with high inflation, economy being kind of a little bit more volatile right now, like what are some safe investments at a time like this?
Well, I think that everybody starts looking at, and there are pros and cons to where we're at right now. Uh, Everybody kind of feels the need to be a little more safe with their investments as they've seen the stock market have a little more volatility. But when you look at your typical safe bank savings kinds of things, they say, well, I'm not making enough money to actually outpace inflation. So, what do I do? And there are a couple of things that are available. One, we have clients, a lot of times we'll talk to them about what are called I bonds. A lot of people have heard about them. They've been in the press a ton in the last number of months. And really, what an I bond is the I part stands for inflation. And so it's a bond that is offered through the federal government. There are limits on how much you can put into it each year, but basically what happens is the rate of return that you receive is based on what the inflation rate is. And so, right now that bond is going to pay somewhere in the 6% range, which is pretty good compared to what you can get maybe at the local savings account or that kind of stuff. So a lot of times what we'll do is we'll talk to clients about saying maybe we should look at doing an I bond. Or there are also what are called Treasury inflation protected securities, and there are different investments that you can do with those as well. And those are all linked to as inflation goes up, those adjust for inflation, and they're a pretty good way to save some money.
So when you say I bond, has nothing to do with like investing in Apple.
Correct.
Okay.
Correct. Yeah. It's not like an iPod or an and with that, a lot of times people say, well, how do I do that? How do I invest in those? And the only way you can invest in them is to go out to the federal government website. It's treasurydirect.gov, and you have to do everything online. But which sometimes people can feel it maybe a little overwhelming or intimidating for some parts of our population, but really it ends up being a pretty easy, smooth uh, option for people if they're looking to invest. And this is money that they have to be able to be willing to tie up for a period of time, but they can get a pretty good rate of return on it.
So you said, you have to have that kind of tied up for a period of time. Like, what about long-term investments? Is there anything different there that people should be thinking about?
Absolutely. It's funny because when we have times of inflation like this, many times the stock market gets pretty volatile. And so people feel like man, I don't know if I want to invest in the stock market. Maybe I want to
But
make some
man,
changes in it.
buy low,
That's
sell
right.
high.
See, Katie, you know it. And what we actually find is that if you look at long periods of time, the stock market is the absolute best hedge against inflation. And so what happens a lot of times, if you think about, if we take a step back maybe and just think about what is inflation, inflation is when you have, I'll say it a couple of different ways. You have the price of goods that are going up, or said differently, the value of your money is worth less, or your dollar is worth less. And really, you can look to things like supply and demand to drive or to figure out what is causing inflation. So if you think about Christmas time, if you're going to buy your kids a Christmas toy, if you're looking for the most popular toy that year, is it going to be on sale?
No.
No. You'll be lucky if you find it, and you're paying a premium probably to get it,
Mm-hmm.
because the supply of those is low, but the demand is high. On the flip side, if at Christmas time you're looking for the toy that nobody wants, are you going to find it? And
Yep.
it's probably going to be on sale, right? Because you have a lot of supply, little demand. And so what happens is, when you think about inflation, what causes that many times is when we have low supply of something and a lot of demand for it. And the pandemic taught us that our supply got low in some places. Just
Toilet paper.
yeah, exactly, exactly. And it was kind of like that moving target too, right? Because like one day it was the toilet paper, the next day, like for some reason I can't get chicken breast or
Right.
whatever, right? It
Right.
was like this moving target. Uh, and so if I take that conversation back to what do I invest in long term, and how does that play out, I start to look at things like the stock market, because the stock market long term is the best hedge against inflation. And if I think about it from just kind of a logical perspective, uh, if inflation is there and prices are going up, eventually companies are going to make money as those prices go up. Initially, when it costs more for them to make their goods and they haven't passed those prices on to the consumer yet, initially it's not so great for business. But in the long term, they have some price flexibility or elasticity that allows them to raise prices, which then allows them to get their profit margin back and allows you to make some money in stocks again. So long term, we'd say look to the stock market, and as that's appropriate for you.
What exactly is long term? Like 5 years,
Yeah,
20
so
years?
so I would say I would target 5 to 10.
Okay.
If you can target that time period, then I think it's appropriate for you to think about looking at some sort of a stock market type of investment.
Now, what if you don't have long term? What if you're approaching retirement age? That stock market's not making sense. You don't want to necessarily tie up money in your I bond with I bonds. What?
100%. So a lot of times as we talk to clients getting to that point, what we talk to them about is, do you need income, or do you need money that's kind of safe and going to earn some interest for you? If we're looking just for money that's safe, going to earn some interest, and I need it only for a short period of time, then I'd say let's look at bank CDs. Bank CDs right now have come up pretty dramatically in interest rates. Uh, you can get a fairly good interest rate. The problem is that interest rate still isn't enough to outpace inflation. You're still losing ground to inflation. So to do that for a long period of time, you're going to lose in that
Mm-hmm.
deal. Uh, if, on the other hand, we have clients that said, I need some more income, there are actually some pretty attractive annuity type products out there, which, if you think about an annuity, you can think about it kind of like a private pension. So if you worked for the teachers union all of your career, you would have a pension. A lot of people don't have that luxury. They don't have
Mm-hmm.
that, but they have a 401k. And so what you can do with that is you can take a part of your 401k, invest it inside of an annuity type product, which will give you a pension, an income you're never going to outlive. And many of those annuities will have an inflation adjustment that you can buy when you do that. And so, if we have concern around high inflation going forward, sometimes that's a really good way to protect your income so you always have the same buying power throughout your retirement.
Okay. So, what if all of that is true? Should you look at your purchasing, how you're purchasing things at the moment? Like, should you reevaluate that?
Yeah, for sure. So, in our opinion, usually what inflation does is it's not complete across the board. Not everything gets expensive. We talked about eggs jokingly at the beginning of this. Eggs have gone up in price far more than other things. Likewise, you can look at the car market. Cars for a period of time back, probably for the last, starting a year, 18 months ago, we just saw car prices skyrocketing. Used cars were going through the roof. Now you're starting to see that shift. And it goes back to that whole supply and demand thing. When there weren't enough new cars, people had to buy used cars, which drove the pricing up. Well, now, as we get new cars that are hitting the lots again, we're seeing used cars actually come down in price. And so, what our suggestion is that when we're in the times of this imbalance between supply and demand, we see some prices going up really high. Try to postpone the purchases on those things that are running rampant with inflation. If you don't need the used car when used car prices are really
What
high,
if you really need a boat? Like you just
yeah, just
really
need it.
need
I
that
gotta have
yacht.
it. Yeah. Well, if that's what you consider a need, then you
You
probably aren't
probably
worried
are
about your
fine.
money
Yeah.
to. Yeah,
If you're
exactly.
thinking you need a yacht,
Yeah,
maybe it's fine
yeah,
to
yeah,
just buy. Okay.
exactly. Uh,
I'll tell Alex.
yeah. And so, yeah, from our perspective, when you're looking at times like this, it's these aren't times to change dramatically your lifestyle. If you're the type that usually is used to going out to eat twice a week and have a lifestyle that is like that, maybe you say, let's go out to eat once a week, or instead of twice a week, type of thing, potentially. But realistically, it's more, look at the larger purchases, look at the things that are going to cost a lot more money, and just wait for the uh, ebb and flow of supply and demand to settle down, so that that pricing looks a little more realistic before you make those large purchases.
I think Alex and I have talked about buying a new car for what, the last
A long
a
time.
long
Yeah.
time, and we keep talking ourselves out of it
Yep.
because exactly for that reason. Like, no, we don't. I don't need a new car. We'll just wait for it to settle back down.
Yeah.
But we've talked about this for
Well,
a year and a half, probably.
which is really a good thing, because sometimes you see people go the opposite way with that, where they get it in their head, they want a new car, and they go out to buy it regardless of what the ramifications are, and then next thing you know, they're feeling
Making
like,
an
why did I?
emotional decision. Oh,
Yeah,
I want that. So nice.
yeah, absolutely.
It's easy to do.
And the other thing that's easy to do, we see it a lot, and have seen it a lot in the housing market over the last couple of years. The housing market got kind of hot, as we've talked even in previous podcasts. And as the housing market heated up, everybody got caught into, well, if I don't put an offer in right now and it's full price, and
Mhm.
then in 3 days it's going to be gone, and it's, whatever.
Does not make for good
It
decisions.
does not.
Yeah.
It does not. And it's the same thing with cars, or any large purchases. If I make the emotional decision to buy before I make the logical, thought out
I
decision.
am really bad at that. Alex has to tell me all the time, like, he's going to tell you this sale is over in 1 hour. Do not do not fall for it, and don't tell him how much you love it.
Yeah. Yeah, exactly. And so there's a lot of those things that, as we work through that, as everyday people, and whether that's in times of inflation or not, those are just good things to try to keep in mind.
Awesome. Well, we hope that you enjoyed this episode of the Retirement Readiness Podcast. If you found any of it helpful, like our Facebook page and subscribe to our YouTube channel. And then we will see you again in the near future. Be well.